Folks, we have a lot to break down in this video, so let's just dive into it. Starting off with Nvidia's earnings that just came out about an hour, 2 hours ago. You guys can see the stock is up 8.5% after the bell. In other words, $18 per share, which is nuts. So let's talk about it. They did EPS of 88 cents versus the 81-cent estimate, so that beat, and revenue beat as well. 6.05 billion versus 6.01 billion. And get this, guys, guidance was pretty strong for Q1 revenue, and you guys know how this goes. When guidance is strong, usually the stock moves up. Not always, of course, not always, but usually it moves up. Investors, traders, they love it when guidance is above the estimate. So they see Q1 revenue of 6.5 billion plus or minus 2% versus the 6.32 billion, which that's pretty good. And data center, I got to slow down, guys. I'm talking too fast. Data center revenue was 3.62 billion, up 11% year over year. And get this, guys, gaming revenue was down 46% year over year. That came in at 1.83 billion. And that makes sense. I mean, there's less computers being built from where we had that boom in 2020, 2021, less gaming. I mean, it makes sense. Even though I'm going to be gaming a little bit after this, guys. I got the Harry Potter game, which I mentioned about a week or two ago. I've been slowly getting through that. It's a fun game. So I'm still gaming a little bit, but the reality is, gaming revenue's down. It doesn't matter what I'm doing. It's still down. It's 1.83 billion, down 46% year over year. So look at the stock. It's up $18 after the bell, completely breaking out on the intraday, on the 5-day. You guys see this big move that it's making. If it wants to load, come on, there we go. You guys see that big move. And on the 20-day chart as well, you guys can see we are starting, to take out the highs from a couple days ago. We're not yet above 230 though. 230 is a big spot coming up, which you guys can see we failed there earlier this month and just about a week ago. So multiple times we failed there throughout, February. So that's going to be the next main test here, no doubt about it. And you can argue that we have a head and shoulders here on Nvidia. Let me actually point it out. We have the left shoulder, the head, the right shoulder. That kind of played out already. So now we're starting to break out. Now all we have to do, you could argue, is break 230, and this is going to be fully on the next leg up, which I know sounds crazy, but that's the reality of the matter here. So I'm going to set my alert at 230 here on Nvidia. And the crazy thing is, guys, I was trying to get this stock. Where was I trying to get it, man? It's completely ran away from me. I was trying to buy this stock at under $100 or something like that. Where was it? Yeah, it was at 108. I was hoping to get it under $100. Actually, if you guys, remember, if you were watching the channel, I did buy Nvidia, not at $100. I bought it, I think, at like 125, something like that, and I sold it shortly thereafter for a quick little trade, for a quick little profit. And yeah, if I held it till today, guys, let's just say I would be up way more. And did I think it was going to go up this much? Of course not. I did not think that. But then again, when I got into the trade, I was only looking for a quick trade. So of course I'm looking at this with hindsight, the benefit of hindsight. But we could all have fun sometimes and do that and think to ourselves, oh man, if I held this, if I held that, if I held this. You guys know how that goes. But yeah, I sold it way too early. I think I sold it in the 140s, 50s. I forget exactly. It was months ago at this point. But yeah, look at it now. It's at 225. If 230 breaks, which is where my alert's at again, we could see a big breakout on Nvidia. Let's actually pull the 3-year up and see some levels coming up here. Actually, look, 230 was the high from, when was this? Back in, when was this actually? Let's zoom in a little bit. This was back in September of 2021. So about a year and a half ago, we failed at 230, dumped to about 195. Then, of course, we ran all the way to $350. So yeah, that makes 230 even a bigger resistance. So that needs to break. If we do get out of there, we have some upside, guys. We're going to have some upside on the stock, maybe towards 270, 265, maybe towards 290 if it gets really hot. And I think, to be honest, I think Nvidia is overvalued here, which is why I kind of said it ran away from me. I was hoping to build it out, and that's a reason why I sold as well. I was hoping at that point to build it out. I kind of got into the trade, quote unquote. Let me explain this. I kind of got into that thinking, okay, I'm going to buy a little at 125. If it goes down a little bit more, under 100, I'm going to make it a long-term investment because that's a level that I was comfortable, making it a long-term investment. But if it were to run, I wouldn't mind taking the short-term profit. You guys know what I mean, right? I'm sure you've gotten into stocks where it's a decent value for the long term and you want to build it out if it gets lower. But on the flip side of that coin, you're not scared, or you're not shy, rather, of getting out of it if it were to see a quick rally and, you take your 10, 15, 20%, in the short term if it were to run. And in this case with Nvidia, it ran. And my goodness, did it run away from me. Now there's no shot I'm buying it as a long-term investment at these levels, but as a trade, who knows? It is still on the cards. It is still on the cards for sure when it comes to Nvidia. So what do you guys think? Kudos to you if you still own this thing. I mean, this thing has more than doubled, from the low, and it's been crushing it. Let me know in the comments. Do you own Nvidia? Seriously, I'm curious, guys, because I don't, but I'd love to know if you guys own it. So that's Nvidia. Let's see what else we had today. We had Lucid, and all these other companies we're going to talk about. I actually didn't look at their numbers yet. Nvidia, I did, so I cheated a little bit on that one, guys. But these ones that we're going to go over, I haven't looked at yet. So let's pull up Lucid and see how crazy this thing is going. I'm sure you guys remember recently it had a massive run from about $6. It went all the way to almost $18. I mean, come on. That was really in one day. I mean, this thing went from $9 to $18 in a day. And now it's at, it closed at $9.98 today, roughly $10. And now it's at $9. So it looks like it's dumping after the bell a pretty good chunk here. About 9% after the bell. So let me pull up the live news tab and we'll take a look at this together and see what they ended up doing. So it looks like they ended up doing Q4 EPS of negative 28 cents, which beat the negative 40-cent estimate. All right, that's not bad. But, oh man, this is not good. Sales, revenue, 0.71 million, which missed the 302.61 million estimated. So they actually missed revenue by about $50 million, which for a growth company like Lucid, which, let's be honest, are they trying to be profitable right now, guys? Heck no. They're trying to scale the business, get the cars out there into the hands of more people. And of course, they're luxury cars, which, I mean, I guess, of course, they're going for, the luxury market. So that's their target market. But how many people are really going to buy these at the end of the day once everybody in the luxury market has bought a Lucid? And honestly, think about it. People are going to be buying Teslas over Lucids, at least in my opinion. I don't know. Call me crazy, guys. But they ended up missing 50 million on revenue, 50 million, which for a growth company, that is not good at all. And they see full year 23 production of 10 to 14,000 vehicles. That's quite a wide range there. 10 to 14,000 vehicles. So it's a very small company, guys, compared to a company like Tesla that did, what, 1.2 million vehicles last year, or whatever the heck it was, 1.3 million. They're only doing 10,000. And the bubble, this stock was in such a bubble. I wish I had my phone on me right now. It's charging. Actually, let me look it up right here. Let me look up the market cap back then. It was just ludicrous. If you guys remember, let me pull it up here. And actually, I'll pull the stock up on the live news, or not the live news tab. Let me pull it up here. You guys are going to see how high this stock was. It was insane. It was just disgustingly high. It was at $65. Now it's at $9. So let me pull up and see what the market cap is, because at one point, if I remember correctly, wasn't this a multi-10 billion market cap? That's just insane. Or maybe I'm thinking oh my God, it still is oh my God, $18 billion market cap, guys, right now. So that means at one point, I mean, I'm not sure how many shares they've issued. Either way, I mean, whatever. I'm not exactly sure exactly what it was, but it had to have been pushing 50, 60 billion. I mean, 70 billion at one point. That is just ludicrous for a company that's only doing 10, 14,000 cars a year, 250 million in revenue. Think about the price to sales on that, guys. That is insane. The price of sales now, I mean, if you're looking at, let's say they do $1 billion on the year, or maybe not. I don't know. They're going to do 250 in the next quarter. So let's say we'll multiply that by 4 for fun. That's $1 billion revenue. They're still about a $19 billion market cap, 19 price to sales ratio, which is just, that's ludicrous. And imagine what it was when, the market cap was way higher. It's just insane. So it was very, very, very overvalued a couple years ago. Well, it was really just 2 years ago. very overvalued at that point, and it's still extremely overvalued, in my opinion. Extremely overvalued. And I believe this was a SPAC, if I remember correctly. It was a SPAC, and, you know, it was at $10. It saw that huge run. Now we're back at $10, just like that. So this could be a stock worth looking at, maybe if it gets to like $2 or $3. But for me, guys, at this point, I'm staying far away. I much rather take the gamble on Tesla, which of course is a way more established company, way brighter future in my opinion. Even though I think Tesla's overvalued as well, I'll be honest, I think it's pretty overvalued. I'd still rather buy an overvalued Tesla than an overvalued Lucid. And I think most people out there would agree with me on that. So let's pull up the next one here, guys. And by the way, if you have not gotten your free stocks from Moomoo yet, use that link down below or go to StasserFest.com/Moomoo. That is STASSERFES.com/Moomoo. Deposit any amount of money and you can get up to, 15 stocks, each up to $2,000. And you could also get 12 stocks from Webull with any amount deposited. All those links down below, guys. Just realize our affiliate links, they do help out the channel. And of course, this is a win-win. You get some free stocks, you help out the channel. I appreciate you guys as always. So next stock is Etsy. Etsy also reported today. Let me pull up the live news tab and we'll see what they ended up doing. So it looks like they missed on EPS, 77 cents versus the 80-cent estimated, but they beat on revenue. Look at that. $807 million versus the $750 million estimated. So they beat revenue by $57 million, unlike Lucid, which again, they missed revenue by about $40 to $50 million. So Etsy's doing pretty well on the revenue side of things, and they see Q1 revenue of $600 to $640 million versus the $621 million. So that's good. And we can see the stock. I'm not surprised. Just looking at those numbers, the stock's moving up. And like I said, guys, with companies that are growing, and Etsy, although they are profitable, they're also a growing company. Investors and traders don't really care that much if EPS misses by a couple cents. As long as revenue's doing well, it's crushing it, and guidance for revenue's looking strong, which in this case, it is. We just read the numbers. They beat revenue by $50 million. Guidance for the next quarter is pretty much right in line, a little bit above the estimates. So Etsy's going to be moving on that. You know, we can see at one point it was at $141. Oh my God, it was at $128, ran a $141. That's 10%. And now it's at about $135. It's still up about 6% here after the bell. So let me pull up the 4-hour chart and we'll see what's going on here. Ooh, what do you guys see right here? Let me point it out to you. We have a clear head and shoulders. Look at that. We have the left shoulder right here. We got the head right there. And then we have the right shoulder. You guys see that right now. And we're currently, if I pull up the 10-day, even though we're running like crazy after the bell right now, guys, we're still in technically a downtrend right here. You guys see that? We're technically at a lower high. So if we fail to break out of 140, 145, this could be setting up for a dump, which could be, pulling back to the 4-hour chart, the right shoulder completing. I mean, it will be. It will be at that point. The right shoulder, even though you could argue the right shoulder has kind of already played out. I mean, yeah, you could argue that. But it could still dump. It could still dump if we fail at 140 and, you know, start to come down 130. We break 130, right? So that's the only thing that I'm looking at that's a little bit alarming right now on Etsy. But if we can take out the downtrend, take out the neckline, which is at 140, guys, then we're going to get the breakout. The head and shoulders is out the window, and then the bulls are going to gain momentum, no doubt about it, from that point. So let me set the alert. Mark is at or above 140, and let me actually get a little sip of Gatorade today, guys. Yeah, I have a Gatorade today. I haven't had one of these in probably years, but I was at my future mother-in-law's house about a couple hours ago, and she had one of these, and I was like, I'm definitely going to get one of these. So I'm definitely going to take one. So we got the cool blue, which I always love the blue one. Can't go wrong with the blue, right, guys? And what's your favorite flavor, guys? I know the orange is great. I know the red's great, but I like the blue, whether it's cool blue or the other lighter blue, whatever the heck it's called, glacier blue, I forget. But either way, cheers. I appreciate you guys for tuning in as always. Now let's talk about the next couple of stocks here. Kathy Wood's favorite stock on planet Earth, Teledoc, which, holy smokes, look at that, guys. It is down about $3 after the bell, which for a stock that's $29, that is a big deal. That's about a 9-10% drop, and at one point it was at $26. Holy crap. So it was down 12% at one point. And there's just some stock picks, guys, that Cathie Wood has. And we all know this. I mean, this is not news or new news. We all know this. Maybe not. I don't know. Unless you guys are just blind to Cathie Wood and you love her so much that you can't be critical of her. I don't know. That's not me, clearly. In my opinion, she has so many stocks that just don't make sense. Teledoc doesn't make sense to me. Roku, which we've talked about so many times on the channel, does not make sense to me. I mean, look at this thing. It was at $300 for Pete's sake. Now it's at $30 a share. It's down 90%. That is 90%. And let me actually pull up the market cap for Teledoc. It's got to be way less than what was Lucid. It's $19 billion. Teledoc's got to be less. Yeah, $4.75 billion. So at one point, Teledoc was a $10 billion market cap, maybe 2030. I forget exactly where it was. But it was just insane. And now it's down to about 21. So let's see what they ended up, $21 a share. Let's see what they ended up doing here on EPS revenue. So they ended up beating on EPS, negative 23 cents adjusted EPS. That ended up beating the negative 25-cent estimate. All right, not too bad. And they ended up doing sales of $637 million versus the 633. So that beat. So double beat there for Teledoc. And what's the price? The price of sales actually isn't that bad. Well, it's still high, but compared to what we saw with Lucid, it's almost 20. This is more like a 5 price of sales. Well, let's say they do. Let's see here. They see Q1 revenue of 610 to 625 million, which is under the 640 million. So their revenue guidance is soft for the upcoming quarter. That's not good. And they actually guide for a loss of 55 to 45 cents for the next quarter. So yeah, Q1, guys, do not expect a great quarter for Teledoc. That's a big reason why the stock is collapsing. Their loss is going to be widening, losses are widening, and revenue is going to be coming down. And let's say they do 600 mil every quarter. What is that? 2.4 billion on the year, right? Yeah, 2.4 billion on the year. Okay, that's actually not that bad of a price of sales. But then again, the stock is down 90%. It's the price of sales should be low. You know what I mean? The market cap is 4.7 billion, so they do 2.4 in sales. All right, what is that? A 2 price of sales? Okay, that's reasonable. If you want to take the swing at the bat here, if you want to swing the bat on Teledoc, and of course there's more to it than just price of sales. I'm just singling out that ratio for this video because it popped in my head for some reason. But there's more research you got to do. But if you want to swing for the fences, if you think it's a value play, I don't agree with that. But if you do, now might be your shot. Now might be your shot. And the thing is, Cathie Wood was buying way higher valuations. You know what I mean? And of course, she actively trades in that ETF, so maybe she sold out and got back in, sold out and got back in. I don't know. But she was definitely buying higher than this level, and I guarantee you she lost money on, some of those shares, maybe a lot of the shares. And she's probably still buying here at these levels, which she might make money on. But I just don't like Teledoc. That's just my personal opinion. We're not going to get deeper into it in this video. We also had Dutch Bros, guys, which is not doing well here after the bell. Let me pull it up. Looks like it's down about 7.5%. So let's pull the live news and see what's going on. They missed EPS 3 cents versus the 7 cent estimated on revenue of 201 million versus the 195 roughly million estimated. So that's pretty good. They beat on that, and they see full year 23 revenue of about 950 to $1 billion. Not too bad. And let's see, what's the estimate on that? 980 million. All right, so pretty much right in line there with the estimated. And it looks like here it's the main reason's got to be the EPS miss as to why the stock is falling. Revenue guidance was not bad, and it's the previous quarter they beat, but EPS missed, and that's got to be the reason why we're falling here. And this stock was up a good amount heading into the report, so that makes sense to me. It ran up from 26 all the way to 40. It makes sense that it's pulling back on an EPS miss, considering it was up about 50%. And guys, newsflash, it is still up 25% after this drop. So Dutch Bros right here, we do have a support right where we are pretty much at this 180 SMA on the 4-hour chart. Now, the $1 million question is, are buyers going to come in there? Are we going to get that bounce, or is this going to fall right through the floor and start to move under, let's say, this point right here, which you guys can see back a couple weeks ago? We held 33, 34 roughly. That was in the beginning of January. Then we had that big push to 40. If we fall through that point at $34 on Dutch Bros, watch out below. That's all I got to say. We also had Sunrun. Let me pull up Sunrun here. They reported, I believe. Let's pull the live news tab up. Doesn't seem like the stock's doing much. It looks like it's down about 10 cents. Boo-hoo, right, guys? We can see they beat EPS 29 cents, which beat that negative 5 cent estimate, so that's good. On sales of 609.1 million, which beat the 593 million estimated. So actually a double beat there for Sunrun. Not too bad. And they see Q4 sales of 609.15 million, which beat this, what is that, 593. So their sales are looking pretty good. They beat. And I always see, do you guys see the Sunrun trucks out there, the vans? I see them all the time around here. I don't know. Maybe it's because maybe they're more popular in certain areas, but I see Sunrun everywhere. And it looks like here a couple weeks ago we got news they're going to enroll up to 7,500 new and existing residential homes, solar and battery systems, and PG&E's service area into energy efficiency, yada yada yada. Yeah, no kidding. I see the trucks all the time. I could definitely see them doing that. So yeah, Sunrun is not doing much. Like I said, the stock is pretty flat. Now it's actually moving up a little bit, but we have a clear descending triangle, which is a little bit alarming to me. I don't know if we're going to break out of this thing. I don't know if we're going to see the descending triangle play out, which means it'd break under 22, which is why my alert is at 22. So I'm going to be patient, going to let it play out here on, Sunrun. And the last one before we wrap the video up, guys, by the way, I appreciate all you for tuning in. Actually, wait a second. We covered this one already. This is TJX. we covered this one already earlier, so I'm not going to cover it again. I don't want to waste your guys' time. But let's see. What else moved that we did not cover? Crowdstrike ended up shooting up. Well, let's see what this is doing. Oh, wait a second. Crowdstrike is up. It went up 4.6 on the day, 4.6%. And we have earnings coming up early March. So now what we're noticing on Crowdstrike, guys, hold on a second. Today we actually bounced off this trend line. We kind of arguably have a cup and handle here, also arguably an ascending triangle. So we have a big resistance coming up, $1.20. I'm glad I actually pulled this one up because this could test maybe tomorrow, maybe at some point later this week. I don't know. But we do have $1.20 coming up as resistance. If that point breaks, guys, we have a wide open gap to 125. Maybe this starts running towards 140, and the stock's already beaten down a ton. Looks like it's reversing. We're above the moving averages. We have a golden cross. So, yeah, CrowdStrike, I'm watching it. And with that being said, ladies and gentlemen, make sure you guys hit the like button, subscribe. I'm going to wrap up the video here. I appreciate you all for tuning in. And don't forget to get all your free money from Moomoo and from Webull, up to 15 stocks from Moomoo, each up to $2,000, and up to 12 stocks from Webull with any amount deposited. Those are linked down below. Feel free to check out my Patreon as well if you want to see my Patreon portfolio, see me build it out. I'm posting updates every single week. We also have a Discord chat. I'm also posting charts throughout the day. All of that's on Patreon down below. And with that being said, cheers, guys. I'll catch you in the next video. And yes, I still have my coffee from this morning on my desk and that good old cool blue Gatorade. Cheers, guys. I'll catch you all in the next one. Peace out.